Hello everyone, and welcome to this Specialist Trading educational presentation. Thanks for joining us on this Saturday morning. Now today I'm going to answer the question, are exits more important than entries? I know a lot of people, a lot of traders have different ideas on this subject, but I think in this next slide you'll be able to answer that question rather easily. For example, let's look at this older chart here in Norwegian Cruise Lines. This is an actual signal that one of our strategies generated in going along. Okay, as you can see here, this is the entry signal. And look what happened in the next 3 days. You had a really nice profit. So at this point, most traders would say, well, obviously the entry is the most important thing. Look at the nice profit I have. Look at the nice trade I have in 3 days. So looking just at this on face value, it's actually really important and more important to know exactly where to enter. Or is it? Because look what happened directly after that. All of the profit that you may have had, was completely wiped out. And at this point, rather than being a winning trade, it turned into an actual loser. So how good was the entry when you couldn't take advantage of it? Well, in today's presentation, I'm going to teach you a simple formula that you'll be able to calculate by hand and know exactly how you would have exited right here. On top of that, I'm going to share with you how this exit would have given you a 1-to-4 risk-reward ratio in just 3 days. In other words, you would have been making 4 times what your risk was. And the simple formula, you'll be able to know exactly how to calculate it. You know what it's based off. We're not going to keep anything away from you. But here's the best thing about today's presentation. Everything you're going to be seeing in this simple formula that calculates these exit points is auto-generated on our platform, the PTS Primo Charting platform. So not only will you know what these exits are based on, with one simple click of your mouse, you'll be able to formulate them and see them automatically displayed on your screen. So this is going to be a great educational presentation. Thank you so much for taking time out of your Saturday morning. My name is Steven Primo. I'm the president and founder of Specialist Trading. And in a few weeks, I will have been trading for 44 years. I can't imagine I've been trading that long, but I have that much experience behind my belt. I've been actually trading for 43 this week, 44 starting in January. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. So that's where we get the name Specialist Trading. A specialist is someone who made markets or specialized in making markets on the floor. So if you wanted to buy or sell, let's say IBM, one of the stocks I made a market in, you would call up your stockbroker. In those days, he would contact the floor broker for that company, and the floor broker would take your order to buy 100 shares of IBM, let's say, and that floor broker would walk up to the trader who specialized in making a market in IBM, and that's what I did roughly for 9 years. I made markets during the crash of '87 and the bull market that followed. So in my experience of being on the floor, I traded just about every different system, every technique, every method you can think of. Also, I traded just about every environment you can think of. Straight up, straight down, sideways markets, doesn't matter. I've traded through them all. So in my nearly 44 years, I know what works in terms of trading, and I know what doesn't work. So we started, Pro Trader Strategies and myself teamed up around 12 or 13 years ago. We started Specialist Trading with that one goal in mind, to simply educate traders on the things that have shown to work, so that you don't have to waste your hard-earned time and money searching for that holy grail, when it's really right here in front of you. It's sound fundamental education. I know a lot of traders say, well, Steve, why do I have to educate myself? Why can't you just tell me what to buy or sell? And that way I'll be able to just, be successful. Well, think about it. The entire industry is based on that premise. All you have to do is go to a chat room or buy this system. You don't have any idea what it's based off of, but it'll automatically spit out buy and sell orders for you. Or you wait for the earnings to come out so you can find out whether you should be buying or selling. Or you just watch the pundits on TV after the close and find out what they think the market's going to do and buy or sell. You see, the entire industry is based on you just blindly following what someone or something else is telling you what to do. Now, if that works so well, if that really is the way you should be trading, then why is it estimated almost every year that 80 to 85% of all traders fail? Obviously, it's because that really doesn't work that well. You should never blindly follow along what someone else is saying, either on TV, in a trading room, or in some Saturday morning webinar. You should be educated with things that have shown high levels of consistency so that ultimately you can make your own trading decision. That's the philosophy behind Specialist Trading. So our goal is simply as educators is simply to, make you aware of all these things that have high levels of consistency and teach you how to apply them so that you can be in charge of your own trading destiny, not us. So that's what we are. First and foremost, an educational company. Okay, a good educational company so that we can get you, for the first time, hopefully, to be that consistent trader I know you're searching for. Now, you're going to see that attention to really try to educate you in today's course, in today's class. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this simple exiting technique. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, as you're taking a brief moment to view our disclaimer, if you'd like to get more education on a daily basis, I invite each and every one of you to follow us on Twitter. There's our handle right there. I would suggest copying that down. Every day I post different information from signals and techniques our strategies have generated to little bits of financial wisdom I've accumulated along the way. So there's lots of great free education on a daily basis. Feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we are a little bit different from educational companies in that we don't in any way tell you how to trade. That's not our goal. You see, a good mentor, a good educator, a good teacher does not trade for you. He teaches you how to trade so that ultimately you can do it. Remember, as an educator, what we want to do is supply you and furnish you with all the things that have shown to have high levels of consistency. So that's my goal as hopefully as your future educator, is to teach you how to trade with the specialist edge. All right, this is the same edge I was taught when I first learned all of these things on the floor of the stock exchange some 4 decades ago, and what I really truly believe have sustained me. And these are the same things I teach all of our students around the world in over 115 countries and in every state in the United States. Are really trying to make you a consistent trader so that ultimately the only person you will be relying on is yourself. Not someone in a chat room, not someone on TV, and not someone in a webinar. I want you to make your own trading decisions, okay? In my 44 years of trading, the only traders I know who are still trading decades, not just a couple of good years or so, but decades, 30, 40, 50 years down the road, are the ones that make their own trading decisions. So this is what we're trying to instill in you. Okay, now, since this is an educational class today, please ask me as many questions as possible. I want to answer all of your questions about this technique I'm going to be sharing with you today. The only thing I asked a little bit different from other webinars is that you wait till the end of class to ask questions. If we stop for every slide the way some other webinars do, we'll be here too long. I don't want to take all of your Saturday morning. So if you have a question, try to remember it or write it down, and I'll get to it at the very end, okay? The only question I will answer now is the most common one, and that is this being recorded? Yes, it is. If you have to leave early, or if you're having technical issues, if you can't see or hear the screen clearly, don't worry. Each and every one of you will be sent a link to this recording so you can watch it over the weekend at your own leisure, all right? Remember, we have a good crowd here today, so we don't want to stop for every slide. If you have a question, please wait till the end. All right, with that stated, let us begin today's educational webinar. So what we're going to be talking about today are exits, because in my opinion, exits are actually way more important than entries. You can get an entry, and as we showed you, in 3 days you'll have a fantastic profit, and then 1 or 2 more days later, it'll all be gone. So if you don't have an exit plan in place, you're going to see your profits whittle away, and they'll turn into 1 or 2 day profits into major losses. So we're going to be talking about range extension levels. This is one of our most popular ways to exit. I actually use this for my own personal trading, but we have upwards in our courses of 6 or 7 different exit plans. This is just one of them, okay? Remember, our job as an educator is to furnish you with all these different variables for exiting, for entering, for placing your stop, and then let you decide. Well, today I'm going to be taking just one of those different features and sharing with you and seeing how this would work into your trading plan. All right. For those of you who aren't aware of what range extension are, and these are just the standard definition of them, what you want to do is measure the range of your setup bar. Now, if you don't know what a setup bar is, think of any strategy, because we're not going to be focusing on the strategy today. We don't care how you trade. Let's say it's from another website, you purchased a strategy. Let's say it's something you made up. Let's say it's based on the full moon. It makes no difference. We don't really care in this presentation today. But every strategy, every system will generate what we call a setup bar. That's when all the rules and all the requirements come into play. And that's where you decide whether to buy or whether to sell. That's the setup, in other words. Or another title for that could be the signal bar. Okay? So once that all comes into play, let's say it's based off of some news event. Let's say it's based off the earnings, okay? All right, you come home from work that one day and you see that the earnings were great, or maybe the earnings came after the close and you say, oh my goodness, these are great earnings. So that, according to your plan, your system says you have to buy it. Well, that is the setup bar. So what you want to do is measure the range of that bar. And the range is from the extreme top to the extreme bottom. For some reason, it's been misinformed a lot of traders that the range is from open to close. That's not what the range is. I don't know how this got started where that's what range is. That's one of the most common mistakes our students make. The range is the very top extreme high of the bar, extreme low of the bar. It does not matter if this is a 5-minute bar. It does not matter if it's a weekly bar or a tick chart. So if you're looking at candlesticks, it's the top of the wick to the bottom of the wick. That's what range is. Range is not, I repeat, not open to close. Range is extreme high to extreme low. So what you want to do is measure that. Could be in points. If you're trading currency pairs, could be in pips. It makes no difference. Now, adding or subtracting that range to either the top or bottom of the setup bar equals a 200% exit level. So in other words, if your system or strategy gives you a buy signal, you want to measure the range. And if you're going long, obviously you want to add that range or that amount of points to the top of the setup bar. That will give you your first exit level. That's a 200% exit level. Now, if you add or subtract that range again, that equals 300 and so on. Now, I know a lot of you may be thoroughly confused by now. It is rather wordy, but don't worry. We like to teach through a lot of examples by showing you charts and display. So let's look at this generic display here. Let's say this is your system based on the earnings, okay? You came home that night, and then the earnings were announced overnight, and they're very good. So you automatically have a buy signal according to your trading plan. So this is your signal bar. This is your setup bar. So what you want to do is, before you enter the trade, measure the range from extreme high to extreme low. Remember, we're not measuring from open to close. It's from extreme high to extreme low. That is the true range. However amount of points or pips, whatever market you're trading, remember, this plan can be used for any market. It makes no difference. 5-minute time frame, monthly bars, it makes no difference. So measure that range, and if you're long, then you simply want to add that same amount of points, and that will give you your first exit level. That's 200%. Because you see here, the first measurement of the range is 100, then you add it again, so that's 200. Now, if you wanted to increase that, you think it's going to go even higher, well, you could add and make 300. Now, on our platform, we have automatic exit plans that go up to 400. I'll explain to you in just a minute why. But we're just looking at 300 here, and so you decide to buy the next morning, and look what happens. You got right up there to the 300-point level. Not a bad little way to exit, right? This is what's called a fixed exit because it's fixed. You know exactly where that level is. Even before you enter the trade, you can enter an order there and have it fixed at that level. All right, so let's look and see, what if we have a sell signal? All right, now remember, it doesn't matter what you trade, what market, what time frame. Let's say you like to trade options. Let's say you like to buy puts, all right? Now your strategy, let's say it's based off the full moon, all right? We don't care what it's based off. Once everything comes into play, once all the requirements have been met, you measure the range of the setup bar. Remember, the range is not the open to close. I don't know how that got started. It always bugs me because for some reason I talk to so many students that say, well, Steve, the range is here to here, right? No, the range is from here to here. That's the range. That's 100%. So you measure that range. And if you're going short, if you sold on the close, if you want to use this technique, the range extension exit, you would now subtract that amount of points or pips, whatever market that is, and this is where your first exit level will be to cover, to exit. Let's say you bought the puts, well, this is where you would exit the trade. Now, if you wanted to get more bang for your buck, you would subtract the same amount of points again to give you the 300-point level, all right? As we see this trade unfold, you had a nice little trade there. In about a week, you got down to the 300% level there. Now, let's look at some range extension exit examples on our platform, because now that you know how this works, you see this calculation, it's really simple to do. But if you're an intraday trader, the way I learned this technique some decades ago on the floor of the exchange, it's a little difficult and cumbersome to apply. If you're trading 1 minute bars and you're trading in and out of trades, you say, oh, hold on, let me figure out okay, the range here is so many points. By the time you figure it out, you may have missed the trade. So here's the beauty of what we did. We formulated this and auto-calculated it on our platform so that these risk-reward levels, these 20, 200, 300, and 400 point exit levels are automatically generated on the platform with one click away. But remember, as an educational company, we're just not saying, listen, you don't need to know what this is based on. Just click this button and it'll automatically generate these exit levels. We want to first teach you and have you understand exactly what this is based off of. Why? Because once you understand what it's based off of, you can make a clear-cut decision as to whether you want to apply it in your own trading. Remember, our goal as an educator is not to trade for you. It's not to simply say, just click on this button and you'll know where to exit. We don't believe in that because that would take away your power. Our goal as an educator is to educate you with all these different variables and let you decide which one makes you feel the most comfortable. In our 40+ years of trading, that is the only way you will become a consistent trader. Not by blindly following along what I do, but by making your own trading decision. Okay, so let's look at a chart here. This is an older chart in BIDU, okay? There's our buy signal. I believe this is a strategy number 4, buy signal, one of our strategies, okay? Remember, we're not going to be focusing on the strategies today. We're just focusing on these exit levels. But here's how simple it is on our platform. Once you have a buy signal generated, it doesn't even mean you've entered into the trade yet. You simply would want to establish your risk placement, which would mean your stop. Let's say we're going to use the most standard and basic, which would be right below where our setup bar is. Okay, the setup bar is right above where the arrow. So we're going to place our stop just below that. All right. Now we click on strategy number 4 on our platform. The drop-down menu will appear, and let's just click on range extension exits. You click that on, and automatically you'll see the 4 different levels. Okay, this is how simple it is. Now, the beauty of this is you know what they're based off of. They're based off the range of this bar, and then you added one here, added another, and so forth. Now we have 4 different exit levels. Now, a lot of traders say, well, Steve, I don't know which one to use. Remember, you're going to have to make that decision, but you have to find out what type of trader you are. If you are the type of trader who likes to get in and out quickly, you don't care to be in a trade and holding up money a long time and holding it up overnight, then obviously you'll want to be using exit level number 1. If you use that, you'll have a 1-to-1 risk-reward ratio. What does that mean? That means you're basically making the same amount you're risking. Now, most traders would say, well, this is not very good because over time, if you just have an adequate strategy, you'll just be basically trading water. Every time you make a little, you'll lose the same amount and so forth, and you won't have anything to show for it. That's true if you don't have a very consistent strategy. But all you need is a strategy that is anywhere from 52 to 55% a winner, and you'll be able to still be profitable with a 1-to-1 risk reward. This is something you have to decide on your own. Now, let's say you're more of a swing trader. You'd like to get in and out, but maybe hold it on a little bit longer. So this would be exit level number 2. You would have a 1-to-2 risk reward ratio. That means you would be making twice what you're risking. And that's a nice little advantage there, because even though maybe you had a couple of losers, well, all you would need would be to have one winner to make it all back. So this is something, a great edge to have in your favor. A lot of traders like to make at least twice what they're risking. Now, as we look upon exit level 3 and 4, this is where you really start to make the money, because basically if you exited here at the 3rd level, you would be making 3 times what you're risking. And if you exited at level 4, you would be making 4 times. These are what's called very high risk-reward ratios. These are the ones that you want to have if your strategy has the capability to go to these levels. You see, the reason is everyone would say, well, why do I just pick 3 or 4 every time? Well, a lot of times your strategy is based off of just getting these quick winners, and it doesn't have the capability of going up to these higher levels. So you have to first decide which type of strategy you're using, and does it have that capability. If it only has the capability of having these quick little 1 or 2 day pops, then you want to use exit levels 1 or 2. If it has the capability to really generate these big winners, well, then focus on 1 or 4. Now, the only reason we have 4 levels here is because oftentimes, a lot of students say, well, why don't I just have, 1 to 5 risk reward ratio or 1 to 10? Oftentimes we will see price get up right up to that 3rd or 4th level before the trend dissipates. So we always suggest to our students that you want to exit the trade entirely at exit level 3 or 4, but no higher, especially in the beginning, because you don't want to give away your profit. As we see the trade unfold here, we see, wow, in one day you would have been able to achieve exit level number 4. And then look what happened after that. It starts to whittle away. Now, let's say you're going short. Here is an example of one of our sell signals. I believe this is strategy number 10. A sell signal was generated right here where most people would have thought, well, it looks like we're firming up here, Steve. This is where the institutions are buying. Our strategy generated a sell signal. Now, to protect yourself, let's use once again the standard stop placement just somewhere above here. Even though it looks like you may have been stopped out, it's going to be somewhere around this level, just a little bit above. Now, we click on the strategy on our platforms. This was strategy number 10. In the drop-down menu, once again, click on range extension exits. As you can see here, they automatically appear. So at this point, you can say to yourself, well, I've been trading this strategy for a while, or maybe it's the same date as one of your methods. And you would say to yourself, well, it doesn't have the capability to get down that far, down to 113 level. Or maybe it does. So this will help you to decide whether it's going to go that low. Let's say you bought the puts. It doesn't matter how you trade. Remember, as educators, we don't care whether you short the stock. We don't care whether you buy puts. We don't care whether you use a spread. That's your decision. Remember, educators don't tell you what vehicle to use to trade, because then we would be trading for you. Our only goal is to tell you, once you've entered into the trade, how you decide to trade, where these exit levels are, and then you can decide. So whether you bought puts or whether you bought a straddle or whether you actually shorted the stock, that's your decision to make, not ours. We do not, have a system where everyone has to trade these certain type of puts or a certain type of way. That's your freedom of choice. We're only sharing with you these exit levels, and this is just one of our different exit levels. We have 7 different plans altogether for exiting. This is just one of those features. Okay, so if you have, your plan or your analysis says, well, this is not going to really go down very low here. I think the market's really strong. Well, then you would possibly want to pick exit level number 1, and that would give you the 1-to-1 risk-reward ratio. You'd basically be making the same amount you'd be risking. But if you have seen that over time, this works rather well, that's a nice quick way to make some money. If you're more of a swing trader, like to stay in for a little more amount of time, well, then you would choose a level number 2, and you would be making roughly twice of what you're risking. That's a nice way to have consistency. Always know that you're making twice more than what you risk, all right? Now, if you have your strategy, whatever you're trading, or you believe the market, your analysis is really going to fall out of bed and all stocks, regardless, are going to really go down much lower, well, then obviously you may want to pick level 3 or level 4. Level 3, you would make 3 times what your risk is. Level 4, you'd make 4 times, all right? But remember, you have to have the capability to know or have a strong predilection that this is going to go down to those levels. This is where we say that your freedom is in your choice. It's up to you to decide. As we see the trade unfold, well, we got down to level 3 and level 4 rather quickly before the markets started to go higher. Now, let's look at that example we shared with you in the beginning in Norwegian Cruise Lines. Here was a buy signal generated by one of our strategies. Here are the exit levels, all right? Let's say we thought that this was really going to take off. We thought that there was going to be good news. We thought that the market was really strong. So we decided to exit at level number 4 right there. We placed our fixed exit point order in there, okay? This is what we mean by fixed. 25, 35 is the level where you should be exiting using this particular strategy plan. So you would have had a fixed order in there. You could have entered even prior to even entering the trade. And as we see, in 3 days, you actually exited there. Nice little trade, okay? You roughly would have bought this stock if you decided to get in on the trade, roughly at about 18, 17 and a half, 18, and exited the next day for 3 days for roughly 7 or 8 points. Not a bad little trade. And now ask yourself, what was more important? Getting in and having a nice winning 3-day proposal there, or getting out? Well, after we see what happened, I think you can honestly say that exits are actually more important than entries, because What does it matter if you had a nice 3-day profit? It was all given back to you the next 3 days, as you can see here. 3 days later, you were lower than when you would have purchased it. And even if you held on, you felt very confident for the next little bounce here. Look how anemic that bounce was. So using the fourth and final exit level, this is where we say you want to be out completely, especially if you're beginning to use this technique, because this is where the trend usually changes. Even though we went up a little bit higher on the day, look what happened after that, okay? And you would have had a nice 1-to-4 risk-reward ratio in just 3 days. So you understand the plan. You understand how this works. You understand exactly what it's based on. This is not a black box. This is not something where we're saying, just click on this and it'll automatically spit out where to exit. It's up to you. We don't believe in that. We want you to understand why you're exiting at these levels and what they're based off of, okay? So let's look at some more recent examples. In the last couple of months, these were actual signals generated by our strategies or our techniques, and these are the actual exit plans. Remember, once again, we want you to decide, and it requires a little soul searching. Are you the type of trader that likes to get in and out quickly? We have a number of students who like to trade that way. In fact, my background was that exact same way when I was on the floor. I used to get in and out in a matter of minutes. So I would usually use exit level number 1. Being a little bit older now and wiser, I say, listen, I think I can make more profits. I'll use exit level number 2 or 3 or sometimes even 4. It's up to you. There's no one right or wrong answer. The wrong answer, once again, is when you just rely on someone or something else to tell you how to trade. Our sole purpose as an educator is to provide you with this information so that ultimately you make your own decisions. All right, so let's look at this example in FSL1. This was in October, the beginning of October, 2 months ago. All right, here's one of our strategy signals. I believe a strategy, I'm not sure if this was strategy 4 or so, but a buy signal was generated on the 2nd of October. All right, all you have to do is click on whatever strategy or technique you're using. It will give you these exit levels. Let's say for all intents and purposes, in this example, we're going to go for the largest exits, exit number 3 or 4, okay? So as we can see here, what happened later on was a week or so later, we got right up to exit number 4. And this is why we always say, protect yourself and exit everything by exit level number 4, because look what happened after that. You see how important it is to have a sound fundamental exit plan. Now, a lot of students say, this is amazing, Steve, this is like magic. It gets right up to level 4 every time. Well, that's not true, because I've been using this for decades. It doesn't always get up to level 4. Sometimes it will get much higher and keep going. Other times it will only reach exit level number 2 or 3 and then turn around. But we've seen over time that on average, exit level number 4 is where you want to be at. So just use that as a suggestion, okay? Here's an example in Twitter. This was in the middle, about a month and a half ago of October. All right, I believe this is a strategy number 4 buy signal. Before you even enter the trade, you could have found out where the exit level was. Now, we had one more exit level. Unfortunately, it went above this chart. We didn't want to stretch out the chart too much. And there was a reason for that, because later on, as you can see, we ultimately got up to exit level number 3. It started to turn around, but then it went higher. Now, if you had chosen exit level number 4, you never would have made it, because look what happened after that, okay? So this is why we say protect yourself. Here's one way to protect yourself that a lot of our students like to do. They'll sell a little bit at each level and then ultimately exit everything at level number 4. So let's say you sold a little of your position. Let's say you only had 200 shares. Well, you'd sell 50 shares here, another 50 shares here, another 50 shares here. So you're out of 150 and you only got 50 shares left. And now when this happened, you would actually exit all of it on this day with a loss, but that's okay. You still would have profited from what you made on the other trades. Let's look at this example in BioNTech, BNTX, okay? We have a cluster. This is called a mini cluster of buy signals right here. 2 buy signals in a row, all right, at the very bottom of this sell-off, all right? We apply the exit levels, a total of 4, all right? We think that we may go up to exit level 3, possibly exit level number 4, and we did. We actually got up to exit level number 4. Look at this nice gap up here that happened, probably based on some news. And since it gapped up higher and opened, if you had a standing order to sell here at 111.97, you most likely would have got close to 114 because it opened much higher. And that would have been a great place to get out entirely, because look what happened after that. Your entire profit would have been wiped out in the next week. Here's another example. This happened in the beginning of November, just last month. This is actually in gold, okay? You can use this in spot gold. It's a 4-hour chart just to show you that this can be applied to any time frame. Buy signal was generated using one of our strategies. We apply all the different exit points. Now, remember, there is an exit level number 4. It just didn't make the top of this chart. As we see, price got us right to here at exit level 3. You could have chosen to exit there, or you could have chosen exit number 4, but look what happened after that. This is why you always have to protect yourself. So even if you decided to exit at level number 4, at least maybe you want to put a protective stop at break even or exit level number 1. Because if something like this happens, you may come home one day, or you may just go to make yourself a sandwich and come back into the trading room and say, what happened to my profit? I was having a nice trade. I was just seconds away from hitting exit level number 4, and look what happened. So if you hadn't chosen to exit at exit level number 3, at least move your stop up to unchanged. So if this type of thing happens, at least you won't have a winning scenario turn into a losing one. The worst case scenario would be that you just broke even. Here's an example in GH. This was just about a month ago, okay, with the auto-generated exit levels. A buy signal was generated. Before we even enter the trade, we could place our fixed exits at whatever level we want. Once again, let's say we wanted to get out at exit level number 4. Well, we were lucky. We got there, and look what happened. It immediately went lower, and then in the days later, it went even lower. So I think the point we're trying to say is, even though these exit levels a lot of time work like magnets, you always have to protect yourself. Because if you don't get out at them, you want to at least move your stop to unchanged if you have a nice profit in place. Because you don't ever, the worst pain in the world as a trader is seeing a profit, a paper profit, and then seeing it whittle away to a loss. And now you have a loss on your hands. That's the worst feeling in the world, because you knew you had money in your hand, you didn't do anything about it, and now it's a loss. So you never want to be there if you have a profit. Always protect your profit. All right, let's apply this to Bitcoin. All right, this is just to share with you that this can be applied to any market, any time frame. This is a daily chart of Bitcoin. This was just about 2 or 3 weeks ago. Buy signal was generated here on the 11th of November. We generate our auto exit levels here, 1, 2, 3, 4, automatically displayed on the platform. And look, in 2 weeks, we got right up there, okay? This is why we say, if you get up to at least level 4, sometimes even level 3, to move your stop to unchanged or get out entirely, because many times the trend will change. Now, here's where students say, Steve, look, I got out and it went higher. Well, sure, but looking back, what if you never got out, waiting for it to get to an exit level number 5 that you made up in your mind here? You would have given back majority of your profit. So you want to protect your profit, at least in the beginning, by exiting at exit level number 4. All right, here's an example in YY. This was just a couple of weeks ago on the 16th of November. We have a buy signal being generated, and we have our 4 exit levels right here, 1, 2, 3, 4. If we had chosen exit level number 3, that would have been a lot wiser. Look what happened. This is always something to tell yourself. If you get up to exit level number 3, always place your stop unchanged. Even though you may have been stopped out with, not even a nice profitable exit, but once it got down here, you would have broken even. That's okay, because what if you had not? And look what happened the very next day, okay? So I'm sure as we look back on this day, if you moved your stop up to unchanged and later on in the day you saw you got stopped out here because it went down to this level, you would have said, gosh, I could have got out at exit level 3. Yeah, and it would have hurt for one day, but looking the next day, you would have said, gosh, thank goodness I got out unchanged, because, the stock fell almost 20 points or more than 20 points the next day. All right, let's look at an example here in NVCR, okay? Novacure. All right, this is a buy signal generated by one of our strategies, I believe strategy number 4. Here are the 4 exit levels. You can choose whatever one you want. In a week time, we got right up to exit level number 4. This is where you want to be out of the trade entirely, because look what happened. I think right now you're answering the question, what is more important, entries or exits? I think at this point you know that exits are extremely, extremely important, because exits are not just designed to give you a profit. An exit is also designed, an exit level is designed to protect that profit. So if you get to a certain level, you either want to move your stop up to unchanged or exit altogether. Let's look at an example here that happened a week or so ago in Sage, another buy signal generated. We automatically click on the exit levels. We have our 4 levels here. We decide for ourselves what we think is going to happen. A lot of our students will exit a little portion at each level. Some of our students will say, well, we get to exit level number 1. I'm not going to exit. I'm going to move my stop if it's somewhere down here to unchanged where I bought it. All right. If we get up to exit level 2, I'll move it up and so forth. Some students will say, well, I'm not going to move my stop up till we get up to exit level number 3. And then at exit level 4, I'll exit everything. There are dozens of ways to trade it. It's up to you to decide. Remember, you're in charge. You should never let anyone tell you how to trade. No 2 traders should ever trade alike. You should trade according to your own means, according to how you feel about risk management and so forth. Now, we got up to exit level number 3. That would have been a good place to exit because look what happened after that. Finally, let's look at Nicola, okay, NKLA. He was a buy signal on the 20th using one of our strategies. Here are the 4 different exit plans. You can make your own decision. In 2 days, you could have got right up to exit level 4. Here's where a lot of our beginning students get really greedy and they say, Steve, it closed up and went even higher. I could have gotten a lot more profit. Remember, it's not about profit. It's about protecting profit because look what happened 3 days later, okay? Exits are far more important than entries because it's about money management. It's about protecting yourself. It's about risk-reward ratio. Entries are just initiating that scenario, but that's really it. The exits have all these other things included with money management and risk-reward and protection and stop placement. Now let's look at some other markets, the EMINIs, FOREX, and also an older ETF. These are older examples. For example, here's a 15-minute chart of the EMINI futures. Buy signal was generated. Here are the 4 different levels. Let's say you don't think this is going to go up too high. You just think it's a quick little pop. You could have exited at 1, 2, and you want to get out by 3 or 4 because you don't think it's going to be that big of a rally. Well, it got up to exit level number 3, and then all the profit was diminished. So this is why a lot of your insight and your experience comes into play. If you've been trading a market for a while, you kind of get a feel. I know a lot of you get a feel over a while knowing how strong or how weak a certain market is. You've been trading that stock or that future for a long time, so you know it'll give you a good idea which exit level to use. Or we look at a weekly chart here of the Swiss franc, all right? This is an entirely different market, an entirely different time frame. The same principle applies. We're going to measure the top of the range from top to bottom, and we're going to subtract the different levels. Even though it's a weekly chart, even though it's a currency pair, it makes no difference. We use the same formula. And here are our 4 different exit plans. Now let's say you think this is going to be a strong sell-off. Well, you were right. It took about 2 or 3 months and coming into March of 2020, but look, you got right down there to exit level 4. You have a great profit, and look what happened right there. Once again, an entirely different market going in an entirely different direction. We get to 4, the exit level number 4, and that's where the trend, the downtrend ends, and now we start going back up. You would have given away all of your profit if you had not taken advantage of that. Finally, let's look at an older example in the QQQs, okay? Here was a buy signal generated by one of our strategies, I believe strategy number 5. We find out where we want to exit. Now, let's say you really thought this was going to be a really strong rally. You've been watching the markets. Maybe you based your strategy off fundamental news. You think this is going to go all the way up to strategy number, or I should say exit number 4. So you place your fixed exit level right there. And when we get up to these levels, you may move your stop up to unchanged. But look what happened. In a couple of weeks, you got right up there. All the while up, you were moving your stop to the different levels, but you exited everything right here. That was a great decision. Exiting at level number 4, look what happened. In 3 days, you gave away all your profit and it turned into a loss. So exits are extremely, extremely important. You need to know all about exiting even before you decide how you're going to trade, what your entry is going to be, what your stop placement is. You need to know about exits. They're extremely, extremely important part of money management. All right, so let's recap. Once again, let's give you this formula. Measure the range of your setup bar. That's where all the requirements come into play. Adding or subtracting that range to either the top if you're long or the bottom if you're short of the setup bar equals a 200% exit level. That's your first exit level. And then adding or subtracting that range again equals 300 and so forth. You never want to go past the 4th level, okay? So ask yourself, Do you think this tool can help your trading starting in 2021? Go back and look at your last 10 or 21 or 10 or 20 trades, okay? Ask yourself, wow, this could have really helped me. So many of the trades I lost money on is because I stayed in too long and then it turned into a loss. If I had used one of these exit plans, I could have really done well this past year. Do you want to start 2021 in the right direction? We have a great way to do that. Here's today's special offer for all of you taking time out of your Saturday morning. We're going to offer you our 7 Secrets of Money Management course. This is extremely important. I think it's more important than knowing the strategy, knowing what market to trade, knowing what time frame, because it's all about money management. If you don't really preserve your profits or really try to minimize your risk, it doesn't matter how great your strategy is, or it doesn't matter how great the market is. You're going to be giving away a lot of that. We're going to be talking about all of this included in the 8 videos, detailed instruction. We're going to talk about stop placement, 6 different techniques. We're going to talk about our RPS method, which tells you how many shares or contracts to purchase. Risk-reward ratios, as we just went over, more information about that. Advanced trade management, as well as access to my personal email. You can ask me questions whenever you like. And on top of that, we're going to throw in a great bonus. We're going to give you access to the PTS Primo Charts. Remember, this is the educational platform that auto-generates these exit levels. We're going to give you 6 months free, included with your purchase of the 7 Secrets of Money Management course. Now, you're not going to just get the defined exit levels using that one trading plan. We're going to throw in so much more that's included on our platform. For example, you'll get our proprietary RPS method calculator. This is a calculator that automatically generates how many shares or shares of stock that you want to be trading. Could be an odd lot, can be a round lot. It'll automatically do that in seconds for you. You'll get our enhanced buy sell line feature. This is a great feature that automatically tells you what the overall trend is. You have 4 different ways to determine this. Our strength of trend tool, a tool I devised with Pro Trader Strategies that has an uncanny ability to tell you whether there's more strength in the move of the current trend or if it's dissipating. This is a great tool to help you decide whether to stay in the trade or not. You have a signal scanner. You can scan for all of these things on a nightly basis or even intraday. Over 90 of the most prominent technical indicators, along with the auto-generated exit levels I just shared with you in today's presentation, and personalized tech support. This is all included free for 6 months. Remember, money management matters. In my opinion, it matters more than the market you're trading. It matters more than the time frame. It matters more than the strategy you're trading. Here's the great offer we have for you today. If you purchased all these separately, it would cost you close to $5,000, okay? We're not going to charge you anywhere near that. In fact, for a limited time only, we're discounting that close to $4,600 in savings. We're only going to offer this for a limited time only for less than $300, $297. This is a fantastic offer to have. You're going to get the money management techniques and all these different methods that I've accumulated in 4 decades at your fingertips for less than $300, $297. I can almost guarantee you that you lost more than that. Many of you who are having a difficult time trading, you lost more than that last month in November, okay? Maybe even in the last couple of days, you lost more than that. For less than $300, you're going to have over 4 decades of money management techniques and methods right at your fingertips, 1 click away with 6 months usage of the platform. As well as that, you'll get access to my personal email where you can ask me questions whenever you'd like, and I'll answer them. In fact, I'm going to be answering questions from our students just after I conclude this over the weekend, so you can email me whenever you'd like with questions about trading. Remember, 2021 is right around the corner. You owe it to yourself to take your trading to the next level in 2021. The best way to do that is to take advantage of this very inexpensive course. You're going to be saving over $4,600. But remember, this is for a limited time only. Here's how to take advantage of this great offer. Contact my sister site. That's Pro Trader Strategies. They're in charge of all the discounting, of all the tech support with the platform. I would strongly suggest giving them a call if you have more questions about the platform or about pricing at 310-598-6677. They have the trading consultants manning the phones right now. They would be more than happy to answer a question or to take your order over the phone. Now, as you see here, the link at the very bottom is the link that will take you to the information and sign-up page. So if you'd like to sign up for this online, you can use that link. Now, that's not a live link, but just right now, a live link was posted on the chat box of the GoToWebinar column on the far right. So if you open that box there, that will take you to a live link, and that will take you to the live page for more information. I promised you I would reserve the last portion for any questions. So if you have questions, once again, now is the time. Just open up your question and answer box and type them in, and I will answer them to the best of my ability. Let's see, one of them here. I like the range extension methods, the way they look, but was wondering, do trailing stops ever have an advantage, or do you ever use both during a trade? That's a great question. Remember, in our 7 Secrets of Money Management, we have upwards of 6 or 7 different stop placements. I believe a couple of those are trailing stop techniques, and we offer them in the course. Now, what a lot of traders like to use is to use a range extension. That means a fixed stop. And maybe, let's say, for example, they'll use exit level number 4. And that's, let's say they have 500 shares. They will exit everything at that level there. They'll put an order in. While the trade is unfolding, they will then use another stop technique, which is a trailing stop technique, which we teach in the course on how to apply this. And this is different from anything you've ever learned before. It's not something that is really taught. It's a technique I learned on the floor. But this is another great way to protect your trade. So if you don't want to move your stop to unchanged, you can trail it along the way. Ultimately, the choice is yours, though. We have a number of our students who say, listen, I only use trailing stops. So I let the market tell me when I'm going to get out. So if I get out with a 2-point gain because I got stopped out with a trailing stop, or if I got stopped out at 20 points, either way the market tells me. Whereas we have other students who say, no, I kind of want to know exactly where I'm getting out. With a trailing stop, you don't really know. I need to know exactly how much money I'm making or losing, so I like to use fixed. Now, is one better than the other? No. The only wrong answer is when you decide to trade how someone tells you how to trade. Excuse me. And that goes entirely against our philosophy. So what we do is provide you with these different stop placements, trailing as well as fixed, and let you decide. So it's entirely up to you. That's a good question, though. You can use both during a trade. Yes, you can use both or just one. It's entirely up to you. Someone said, I came in late. Can you use this for all markets? Yes. If you came in late, you saw that I used it on a 4-hour chart of the, or I should say a weekly chart of the Swiss franc. We also used it on an intraday chart of EMINIs. So I mainly trade intraday EMINI charts because of my time schedule and because of webinars and teaching. I don't get a lot of time to look at a lot of stocks and overnight positions. So I like to intraday trade. It's my background. That's where I started out on the floor, intraday trading. So I use these same techniques, everything that I teach you in the 7 Secrets of Money Management course for intraday trading. So it makes no difference what market or what time frame. All of these techniques can easily be applied to anything. So I don't want you to think that because of the majority of the examples today were used on stocks. It makes absolutely no difference. We have students using this on currency pairs. I showed examples in Bitcoin. I also showed examples in the EMINI futures. It makes absolutely no difference what market you're trading, okay? Someone is asking, what if we want to extend our use of the platform? That's a good question. And I venture to say that upwards of 70 to 80% of our students who have taken packages where they give 6 months of the platform extend it because there is so much information. There's so many great techniques that are so simple and one click away that we teach you how to use. You won't find these techniques anywhere because there are things that I learned from the floor. Such as, the range extensions. A lot of people have never heard of these before, such as the strength of trend tool. This is the way we determine whether a trend is coming out of its momentum phase or if it's entering one. There's a lot of great things, and they're so simple to apply. We teach you how to apply all of these. They're all on the platform. So what usually happens is that the price goes after that. And if you're a customer, I know Pro Trader Strategies is very flexible. They will be more than happy to give you some type of deal with your extension. I believe the standard price, if you don't have a current strategy or if you've never been a student before, is roughly $97 per month. But I believe they would be more than happy to give you some type of flexibility in a deal if you want to extend it. But take advantage of this 6 months and see how great and how useful the platform is. And I'm sure after 6 months, you'll be saying to yourself, wow, that's amazing. I want to extend that because, as I said, 70 to 80% of our students continue to use the platform afterwards because it's so valuable. The tools really help, and these are tools I use in my own personal trading. Okay. Someone also saying, well, does the 7 Secrets of Money Management education expire after 6 months? No, that's yours to keep. You get all of those videos and the links to those online courses. Those are yours forever. So for $297, you're getting a money management course that has over 4 decades of information in there that you won't find anywhere else. Things that I've taken from the floor and that I've accumulated in over 4 decades. And they're yours to keep for less than $300. So this is an amazing, very inexpensive offer. Remember, in my opinion, money management is more important than the market you're trading. It's more important than the strategy you're trading or system you're trading. So take your trading to the next level. I know many of you. So I see the emails from people who want to become students of mine. I see how people have talked in other presentations and other webinars and other so-called educators. I go to watch other videos as well. And I see how students are struggling in 2020. And start 2021 right off in the right direction, okay? Take advantage of this great, inexpensive offer. And you'll be a student of mine as well. Remember, you can contact me whenever you'd like. As I stated, I'm going to be answering emails as soon as we finish this presentation today and answering some questions some of our students have sent me this morning. So I'll be there with you every step of the way. If you're having difficulty, this is a great way to get started, okay? As we conclude, I just want to say thank you so much for taking time out of your Saturday morning. And as you take one last look at our disclaimer, I really hope a lot of this made sense to you today. I hope you understand the formula and the calculation for the range extensions. As you can see, we really want to show you our sincerity in trying to educate you. We're not just trying to sell you some $10,000 package and say, good luck. We want to give you something inexpensive that you could afford, as well as we want to educate you for free on our webinars. So I hope you saw our sincerity. We're really trying to educate you, but most especially, I look forward to all of you becoming students of mine in the 7 Secrets of Money Management course, okay, and taking your trading to the next level in 2021. Have a great weekend. Hope to see you in class. Bye-bye.